Let me start this video by saying I apologize deeply if you watched my previous video about setting trailing stop loss orders inside Interactive Brokers and you lost money. I'm sorry I gave out bad information in that video, and this video is here to correct that mistake. I pride myself on putting out good quality content, especially around the Interactive Broker space, and I didn't get this one right, so I'm here to make amends. Again, I'm truly sorry if you lost money. Here's the actual way to set trailing stop loss orders inside Interactive Brokers. So what I messed up on last time was setting these stop price amounts when you're making your trade inside Interactive Brokers. If your stock price is there, I'm going to walk you through an example of how to do it correctly here live on this video. But your stock price at $64 here for Coca-Cola, if you put the stop price above the current price of the stock, it's going to get filled immediately when the market opens or when you make this trade. It's not going to go and wait, like I said in this video, until it gets up to $74. Because the current stock price is below 74, this is going to fill immediately at whatever the stock price is at. If it's at $65, you're going to sell all your shares for $65. Maybe that is a net negative or net positive, but it's going to get you out of the trade right away. If that's 64.02, it's going to sell right away at 64.02. I thought incorrectly that you could set this stop price at whatever you wanted to. And once that price was hit, then the trail amount would kick in, and then the stock would kind of start going up and down and actually building off this trail amount. That is not the case. Again, I apologize. Here's the right way to do this and set this up correctly inside Interactive Brokers or whatever trading app you choose to trade on. So for this example, we're going to use my position of Meta here in this paper account. 100 shares, average price 292, some profit baked in there, and currently it just traded at the last price at 403.50. Okay, and I'm going to share a spreadsheet with you in a second to visualize this a little bit better as well. So to do this properly and have this trailing stop order, we want to sell Meta. Our quantity is 100, that's correct. We're going to go down here and go to trail. Now there's two different ways to do this, and the first way, I'll explain these both correctly this time. If you leave it at STP, and let's have our trail limit at $1, what this is saying is that if the stock price of Meta, which again is last traded at 403.50, okay, that's the last price from our portfolio over here. If that price goes from 403.50 minus $1, so down to 402.50, we're going to sell. Okay, that's what STP being here means, because we're not specifying an actual stop amount. We can go in here and change this to a dollar amount if we want to, whatever we want to do. If you leave it at STP or the stop, it's going to automatically take the $1 trail amount or whatever this trail amount is. If it's $10, if it's $20, it's going to apply that to the current stock price. And that's where you're going to get stopped out at if you were to just leave this as stop, STP, and the trail. Okay. In a spreadsheet format, it looks like this. In this scenario, the stop is going to be equal to this price. And we've got our trail of $1 there. Let's make that $1, which means, again, we're going to stop out equals 403 minus 1. So if the price of Meta drops $1, with this currently being set the way that it is with this STP, right? And our trail amount is 1, right? If I go like this, STP, right? That's what we're putting it in as. Then this is going to equal, again, 403 minus our stop, because this STP is just a placeholder for the current stock price, okay? The other way to do this, and the one that I think most people that potentially could have made the mistake because I explained it the wrong way would have done this at my own beck and call. I thought you could set this stop price to be above 403. Let's say it's going to be 410. And I would say that then the stock price or this trail price and the stop out wouldn't happen until the stock price of Meta hits 410. That is in fact wrong, okay? The whole trailing stop order is designed to give you a downside protection on a trade, so to lock in some profit and not lose all this, or to potentially limit your loss, while not capping your upside or your maximum gain. So what you have to do if you want to manually set a price for this is go lower than the current stock price. So if I went here and went 400 with a trail of $1, okay, that is not going to trigger me right away because my current price is at 403.50 the last, right? If the stock price of Meta goes down to 400, I'm stopped out, okay? I'm stopped out. That's the lowest it's going to go before it stops me out, right? And my trail amount is there on the upside move, okay? So this trail amount's only going to kick in if the stock price moves higher above 403.50. If the price just starts dropping from 403.50 down to 402, 401, the trail's not going to do anything here in this example, and it's just going to wait to get stopped out at 400. Okay, if it goes above that 403.50 level, the trail amount's going to start being in play. If it goes up to 404.50, 405.50, then if there's a dollar pullback from that point, then it's going to cap you out and trade that trailing stop amount and give you a trade with a little bit more profit. That's the way that this is designed to work. So if we copy this down and we put this at 400, right? Okay, our stop out point is going to be straight up. It's going to be 400. Let's make these all dollars right now. And, right, if the stock price of Meta goes down to 402, nothing happens. 401, nothing happens. Nothing happens with the trail amount. Nothing happens with the stop loss. But as soon as it hits that $400 mark, boom, we're going to be out and we're going to be selling for 400. And that protects our downside loss. If the stock price starts going 410, 420, okay? Now our trailing stop amount is going to kick in. If it goes from 403.50 up to 410, our new stop out is going to be 410 minus that $1 trail amount, okay? And then this is going to be the same thing if it keeps going higher without any kind of pullbacks along the way. It's going to be 419. But again, as soon as this price goes above and starts moving higher up to these numbers, maybe it's whatever, 406 or 07, 411, right? Those new stop amounts are going to be in play with that trailing amount, which means that if there's a $1 move and the price of the stock moves by $1 very frequently, it's likely that these are going to get triggered and you're going to stop it with the trail amount and you're going to take your profit and you're going to be a happy person for taking that profit. The 400 is going to still be there for your downside. And again, if it starts to kind of just start going down right off the hop, it's going to hit that 400 and then it's going to execute. But the key here, and the key thing to remember that I messed up on the first time, I'm very sorry again, set your stop amount below the current price of the stock that you're trading. Think of it as a stop loss or a stop level that you'd look at on a normal chart. If you were buying the shares of Meta at 403.50 and you want to have a stop loss, it's always going to be below the 403 or whatever you purchased at 403. It's going to be below that level. So set that stop order below the purchase price for those shares, and then set your trail amount based on if it goes up, how many dollars or percentage you want it to kind of fluctuate before you cap out and you say, that's enough, I'm taking profit. But the stop part, go below the current value of the stock, below the current value of the stock. That's all I'm going to say. I messed that one up. I'm very sorry that I did that. I really want to give you guys the best information here with Interactive Brokers and the platform as a whole. So again, I apologize. I hope this clears up the issue. And again, if you did happen to lose cash, I'm truly sorry. I am not here to kind of make a quick buck and just put out crappy content. It really matters to me and I want to do this the right way. So I hope you got better value out of this video, explaining things the right way. And I'm going to continue to kind of work and get better at this as we go. I'm sorry I made the mistake and it's there, but I can only move forward and hopefully keep providing you with the value you've come to know and expect. So thank you for watching. If you did, if it's cleared this up, I hope it did. If you want more information, as always, leave me a comment and let me know. Try this out in the paper trading world first, obviously, before you go and trade this, to make sure that you understand what's going on, that even as a check for me to put out good information. Always paper trade something new that you don't fully kind of walk through before, and can't go wrong if you paper trade it first and get a feel for what's happening in the market. So that is the refurbished trailing stop order and stop loss video. Hope you guys enjoyed it, and I will catch you on the next one.